Welcome. It's Mark Albert. Today, we're going to consider two questions that I come across often. And first question is, why should you invest in an RRSP? We got 4 points. We're going to hit on that. The next question is why you should not invest in an RRSP. And I got four other main topics on that. And then we're going to follow up. We have a bottom line at the end of that where we're going to basically give you some guiding principles on that. Ultimately, you want to consult with your financial advisor on that matter to make sure it fits your overall financial strategy. I will say before we start, if you could hit the thumbs up button and subscribe, that would just tickle me pink. I'd love that, and I really appreciate that. So that's what we're going to do today, and we're going to get through that. And I feel that you're going to learn something here. It's going to be a good time together. So the main advantages of the RSP, basically, it revolves around taxation. So to tax defer, so you tax defer your money. So there's a tax consequence, what happens at the end when you take it out. You tax shelter your money. So the growth is all tax free. So you're not taxed on the growth every year. There's no tax consequences every year. It just grows tax free. And another thing that people like, particularly high income earners, is this tax deduction strategy, which we're not going to really drive down in terms of what it is, but why you would do it and why you would not invest in an RSP. So this generally works best when you expect to be in a low income bracket in retirement. So if you have a high income throughout your working years, drives down your taxable income. And then in retirement, if you have a lower income, that's very often generally what people tend to do there. So in terms of why you should invest in an RRSP, I got four reasons here. The immediate tax deduction, that is super fantastic. It lowers your taxable income right now. So you may have a significantly high tax year. Maybe you're in sales or your business, your income exploded. Before that year is over, you could do a sizable contribution to your RSP, and that will drive down your taxable income, which would be amazing. So a second reason why you should invest in an RSP is the tax deferred growth. Tax deferred growth is amazing. You add compound interest in the midst of tax deferred growth, and it's a very powerful tool compared to if it was in a non-registered taxable investment. So any investment income could be interest, dividends, capital gains, earns, grows inside the RSP and is not taxed, which is outstanding. The third reason why I think you should consider investing in an RSP is in some cases, not for everybody here, but in some cases, the special programs for the home buyers, first-time home buyers, and if you want to do extra education. So the home buyers plan, you can use up to $35,000. You pull it out. It applies only if you're a first-time home buyer. It's a tax-free withdrawal at this point, and you have 15 years to pay it back. So each year, a 15th of it needs to be paid back. If you don't, instead of it being tax-free, that portion would be taxable when you file your income tax. That's how it works. A lot of people will pay it back over time. You can pay it back as a lump sum if you want to. If you don't pay it back, it just adds a little bit of taxation every year when you file your income tax. So the second one here for special programs is a lifelong learning plan. And you can withdraw up to $20,000. Again, it's tax-free. It's $10,000 per year that you could pull like that. And it's basically to finance full-time education. Okay. And you got to pay it back within the 10 years. Same type of rules apply on the repayment. So the fourth one, and I like this one a lot, this one makes huge sense if one spouse is a very high income earner and the other one's low income. So if one of the spouses is home with the kids, this is a very good one that I like to implement within a couple. So if you are a higher income earner, you contribute to the spousal. So you contribute to the spousal. The high income earner gets a tax deduction, help him when he files his income tax. And the spouse who receives it, they actually, that's their money, right? And so that's really great. And then if they pull out that money within the first 2 years, then the tax consequence goes to the spouse who contributed. After 2 years, then the taxable consequences is for the spouse who has the spousal RSP. So it's a tool for income splitting. It's fantastic in retirement. It works really, really good, particularly if one spouse at their work, they have a pension. They're going to receive a sizable pension, but they want to contribute RSPs privately for themselves. That should be a spousal RSP for the other spouse, just for income splitting strategy. Okay, really good stuff there. So why you should not invest in an RRSP. So I got 4 points here. We're going to hit them together, and then we'll sum it up, and that'll be it. Well, there's a situation where an RSP may not be optimum as a savings vehicle. It's a retirement product, but it may not be optimum, especially compared to the tax-free savings account. You may want to seek professional advice on this to see if it's a good fit. Usually you want to do a financial needs analysis with a competent financial professional to check out the overall strategy in terms of income and retirement. So if other financial priorities are more pressing, then maybe not a good idea. So the first reason why you should not consider it is if you're very low income. So your income bracket's really low. You have minimal upfront tax benefit. So the tax deduction has extremely low impact for you. So you're better off to just do a tax-free savings account on that. So if your income is so low, your marginal tax rate, the impact is so minor, I would walk away from that. The consequences are horrible if you have to pull it out, in compared to the tax benefit of doing the deposit. So if you expect your income to be significantly higher in the future, okay, it might be better to save off on your RSP contributions. Just do TFSA for now, and when your income shoots way up, then you could maybe get involved a bit more heavily in the RSP side. So another reason why maybe you should not invest in an RSP is withdrawals are fully taxable. That's a big issue on income and retirement. Fully taxable. Every dollar you withdraw is full taxable consequences. So the impact on the government benefits also plays into that. So whether it's an RSP or a RIF in the later years when you convert it for income, the withdrawals are considerable when it comes to that. Not to mention withholding tax on the RSP. If it's a RIF, it's fully taxed, and anything beyond the minimum withdrawal that the government sets, you have also to deal with withholding tax, so the doubly tax on the RIF at that point. So the government benefits, so the guaranteed income supplement in retirement, that's basically an expansion of the old age security, but the guaranteed income supplement is designed for lower income seniors. And so and it's income tested. So an RRSP or RIF, they will be counted as taxable income, will hurt your ability to qualify for that. And then the clawback strategy that the government has, that's basically for higher income seniors on their old age security where it starts clawing back. So if you're experiencing clawback, most likely you're making a reasonable amount of income for your current situation. And that's why they do the clawback there. So a third reason why maybe you shouldn't invest in an RSP is the lost contribution room on withdrawals. So there's penalty on early withdrawals. So If you withdraw funds from your RSP and it's not part of the home buyers plan or the lifelong learning plan, then you're going to lose your contribution room and you're taxed immediately on that as well. And then, of course, as an RSP, you're also going to be subject to the withholding tax. And then you permanently lose your contribution room that you had, which is different than the TFSA. TFSA at the end of the year, January 1, it resets prior contribution room after withdrawals. You get that money back in terms of contribution room. And the third reason why you should not invest in an RSP is basically as a fourth reason, is this high interest debt. So if you have high interest debt, you want to prioritize paying down the debt. So you may have a lot of credit card debt, personal loan that's high interest. And basically, those are the kind of things where you most likely are better off to focus on paying down the debt, get on top of the debt, get rid of that high interest debt, and then you can reestablish payments on your RRSP. So the bottom line, in terms of, should I consider investing in an RRSP? The bottom line is this. This is the bottom kind of guiding principle. If you have high income now during your working years, and you expect lower income in retirement, then that might be something that's a good fit for you. So to maximize the taxable deduction now, because you have a high income and you have a high marginal tax rate, but then in the later years, you pay less tax if you're in a lower tax bracket. One of the dangers of doing this over many, many years is you can get hundreds and hundreds of thousands of dollars grown of RRSP. And if you pass away, obviously, if you're married, you can set it up with the named beneficiary of your spouse. It rolls over to the spouse. But when the last spouse dies, or if you're a single person, all of that money, whether it be RSP or RIF, is taxed to the estate after you pass away. So when the executor has your income tax filing to do, it's a major tax burden, and that's one of the bigger tax burdens that I see when after people pass away. So just keep that in mind. And there's ways to strategize that. We can talk further if you want to separate. So another bottom line is if you do not, why not to invest in an RSP is you should potentially strategize to prioritize the TFSA or save your RSP room if it's not the best time. So you do that if you're lower income now, and if you expect to be higher income in retirement, then maybe just really start pounding away at building your TFSA. And then there's other things you can do beyond that to grow your wealth. Therefore, save for retirement in the TFSA first in this situation, or wait to contribute to your RSP when your income is higher to take advantage of the deduction. And that's it. Listen, I hope this is beneficial. If you haven't already, please give me a thumbs up and subscribe. Have yourself a great day. We'll talk to you soon.